earnings season will kick into full gear on Wednesday with a slew of big banks reporting throughout the week. We'll also get a read in on AI demand with Taiwan Semiconductor reporting Thursday. AI largely seen as a catalyst for the markets. Here to discuss the outlook for earnings season and the markets, we've got Larry Adam, who is the Chief Investment Officer at Raymond James. Larry, great to have you here on the program with us. As you are gearing up for this earnings season, what are the core themes that you're anticipating could prevail?
Well, first of all, I think this is one of the most consequential earnings seasons we're going to have. And really the main reason for that is that I think we're at the interaction of pretty elevated valuations. And when I mean that, it's the fact that we are in the 96th percentile when it comes to valuations. And then we have some uber optimism out there on the behalf of investors. So I think the number one question is whether or not companies will be able to deliver with their fourth quarter results and then their guidance as we look into this year. And to your point, some of the things I'll be looking for is that how companies are responding to their expectations of what happens with tariffs, with deregulation, with the strength of the dollar that we've seen here of late. And then really, what's the strength of the consumer? Because the consumer continues to be about 70% of this economy. How's the consumer doing? So we'll be looking for things like that.
Larry, it seemed like AI exuberance was enough of a thread for the past 2 years to really drive many of the company performances here and really kind of be that broad-based theme where every company was talking about how they're leveraging AI in one facet or another. But it seems like there's a new catalyst that investors are looking for here. What is that new catalyst from your mind and your own anticipation that could drive the S&P 500 higher to your target? I believe your year-end target is 63.75 for the S&P 500.
Well, two things to say there. First of all, that 63.75 is a pretty interesting target because if you do look at the forecasts that are out there, it's probably one of the lowest on Wall Street. So we are a little bit more cautious because of that uber optimism that I mentioned on behalf of investors. But I think one of the things that's going to be very important that you're mentioning is that we expect a broadening of earnings growth this particular quarter, but not a rotation. Because I do think that technology is going to continue to be a strong contributor to earnings growth, but I think you're going to start to see the rest of the market start to pick up their pace. And what I mean by that is that if you looked at the mega cap tech stocks for this quarter, we're looking for them to grow at about 22% their earnings growth. But the rest of the market, we think, will start to pick up at around 8%. The significance of that 8% is that that's the fastest pace of those earnings for the rest of the market since the second quarter of 2022. So it's been a while since we've seen that broader participation. And I think that'll help lift the overall market as we go forward.
Okay, given your year-end target and the fact that you mentioned it is one of the lower ones out there on the street right now, does that also anticipate that we could see some form of correction on the way to that target?
Yeah, I think that there is some vulnerabilities in this market. One of the things that we talk about is the fact that when you look at investor confidence, it's at an all-time record high. And the way we get that is that there's a consumer survey out there and it asks people, do you think the equity market's going to go higher? And well over 50% of investors think the market's going to go higher over the next 12 months. Historically, when it's gotten over 45%, the market has been prone to pullbacks and more volatility. So I think that that's likely because if you think about it, if everybody's optimistic, who's left really to keep buying stocks? So I think the market has to get a little bit, digest a lot of that over optimism that's out there. So we do expect more volatility. We think selectivity is going to be critical this year. One of the drivers of that is that when you have higher valuations like we do right now, you actually need the earnings growth to take you higher. And that's why I continue to favor certain sectors like technology, healthcare, and industrials, because that's where the growth is going to be in the market going forward.